What's happening, good people? We're here for Macro Dirt Podcast, Baker's Dozen, number 13. What is happening, JD's nuts?
What's up, fluffer?
Oh boy, that's almost an insult there. I don't know what that means. But it keeps us lively right into it, right? Let's get started, JD. First of all, happy Constitution and Citizenship Day, right? Yeah, absolutely. Constitution and Citizenship Day, September 17th, 1787. Members of the Constitutional Convention signed the final draft of the Constitution. That's kind of cool. In 2004, Senator Robert Byrd dunked the holiday into an omnibus bill and turned Citizenship Day into Constitution and Citizenship Day. And what I love about that, the hot talk on the Constitution that just comes to mind is Joe Rogan. I'm listening to Joe Rogan interview Brett Weinstein, and he's like, Brett, I just want to show you this New York Times article. The article is entitled, "The Constitution is Sacred. Is it also dangerous?" And Joe Rogan's going like, what the fuck is going on here?
I know. I saw that piece.
Yeah. It's just cool to see
Yeah.
people have the reaction like, excuse me, what is the New York Times point that they're trying to make? Right. And just call them out. So that's fun. We got a new book coming out.
Yes, I do.
Let's get the horn, man. What do we got? We got Night Moves and Other Stories.
Oh, the horn is out.
That's
I gotta get a
omen.
new horn.
All right, we got to get a new air horn, but
Yeah.
we ran out on the book, and that's good omen to me. I'm the most superstitious person alive. That's a good omen. Talk to me about the book. When are we getting it?
So Night Moves is a short story collection. It has 16 short stories. They're fucking awesome. They're really, really good. TG has read some of them. He can attest to how good they are. I will say some of them are a little explicit. Some of them are a little NC-17, but you're going to enjoy it. This comes out Monday the 23rd of September. Got to pick it up. Everybody, we get, I don't know how many views on this thing, like 5,000 views or something like that. Like more on Twitter. Everybody has to pick up a copy of this book. It is pure entertainment. You will love it.
That's a good enough endorsement for me. You know, I'm a big fan of JD's work. I've read a few of the short stories. I like short stories because they're like podcasts, right? You can bang them out in a short period of time. You're done. You get a takeaway, a little message. And your NC-17 stuff is fine with me because that somehow keeps it really real. You know, sometimes all too real, but that's okay.
Yep.
Right. So congratulations on that. I hope you do great. I think that the horn running out of steam on the Night Moves call is the best luck that you could ask for. Exactly. We're out of gas. We're moving on to the next horn cartridge for Dirtcast number 14. All right. Markets, bro. All right. We've got rate cut day tomorrow. The market's decided it's going to be 50 bips. I'll let you take it away, and then I will pile on.
Yeah, so I also think it's going to be 50. Last week I thought it was going to be 25, but here's what happened. I was at my desk Friday afternoon, and I got the markets up to my left. I got 2-year notes. I got SOFR, and kind of like I'm writing, and I look over at the markets, and I'm writing, and I look over at the markets, and I look over, and 2-year notes are like 10 ticks higher. And I'm like, what the hell just happened? There's no economic data. There's nothing going on. So I'm futzing around on Twitter trying to figure what happened. And there was like a leak from the Fed that they were going to cut 50, like a rumor of a leak or something. And I'm like, I do not want to fade this. I do not want to fade a leak out of the Fed. Right. So, because I had been thinking about like, selling some twos or doing some other stuff to like bet against the 50. And I'm like, absolutely not now. So
great trader's intuition right there.
Yeah.
You know when there's a steamroller coming.
Yeah.
And what's important is that, we always talk about the Fed, and I always look at them as masters of expectation management. So if you think that they're floating a leak, good grief, get out of the way, right? Like that's the message 100%. So I think that's important. So what I want to go over, JD, for our listeners is kind of a where's the money, right? And so I want to see how the charts line up. So if we start, let's just start with something that is always top of mind for me, which is the S&P, right? We're going into this thing with the S&P screeching against the all-time high,
Yep.
right? We've came back roaring against what was a potential double top. We had a peak in July, a peak in August. Both peaks had outside reversal weeks at the top,
Yep.
right? To give bears a little something to lean
No
on.
such thing as a triple top, my friend.
Exactly. And that's what it's kind of lining up to right here. Now,
I'm bullish on stocks. I think stocks are gonna break out. Yeah.
the price action is uneffing deniable, right?
Yeah.
If you thought you were getting a nice little dip down to 5,200 again to trade, we never got that. The most recent dip stalled at like 54 and a quarter on the downside.
Yep.
And here we are 300 points higher in 2 days.
Yep. Yep.
Price action is stinging right now, right? It's pulling the bears out. It's getting all the shorts covered. So my point is this. Your point is there's no such thing as a triple top, which I tend to agree with. On a momentum move through the S&P, I will probably get long again for a trade. If there is something that goes on where this is a head fake, what's left is the scariest triple top on the charts that we've ever seen. And, we'll see what happens. So is there a chance, JD, that stocks, is there a chance of 25 basis points and the market's disappointed and stocks back off? Is that a possibility or no?
I'd say there's like a 10 or 15% chance of that. That would hurt me. That would hurt me because I'm short the back end, I'm short the long end, I'm short bonds.
Yep. Yep.
So what I think is that they're going to cut 50 and the curve's going to steepen and the long end's going to sell off.
Okay.
Keep in mind, if you're trading intraday on Fed day, the market always follows the same pattern. It's either up, up, or down, down, right?
Yeah.
So
Yeah.
if we cut 50, market's going to rip higher and it's going to stay there for about 5 or 10 minutes and then it's going to crash like 50 to 70 handles and wipe everybody out, and then it's going to be down there for like a half an hour and then it's going to rip and make new highs. That's the pattern it follows all the time.
Yeah.
So
That's amazing. You know what pattern that is also? That's the Nvidia bull market pattern where, it's the same exact daily chart every single day where, it's stock opens bid, pulls into yesterday's range and then guns it. And the pull into the previous day's range is when all the wise guys, day traders get short and then they get rinsed and the whole thing is a big screw job. But it's fun to watch. What are we looking for in TLT if Braden would throw that chart up there now, right? We've got really, really, an interesting potential double top, but it looks like on a longer term chart that this is kind of a turn in the markets and TLT can keep rallying. What do you think here, JD? I know you're short the back end, so
yeah.
with that as
So
a caveat, yeah.
PLT, so we got retail sales this morning.
Yeah.
It was kind of mixed. The headline was a little better. The core numbers were a little worse. Bonds sold off. They rallied initially, but then they sold off. They're down now. The yen is selling off for the first time in like a month, and bonds are typically correlated with yen. I think we put in the top of the bond market this morning, and I think it's going to get tattooed on Fed day. So I got a lot of risk on that. So I'm talking my book. But that's my call.
That's okay though. If any market looks like it is coming to an interim crescendo, to me, it has got to be TLT. I mean, we haven't priced in rate cuts in forever, and now all of a sudden we're going, a string of rate cuts right to 50 bips off the bat. The setup for an Icarus print in TLT in the short term, there's a lot of potential there. What's interesting also, if you've had your eye on TIPS, right? Treasury inflation protected securities, there's been just constant outflow, and so that's interesting. The TIPS have just picked their head up, but they have just been a one-way train lower, and that is sort of everybody's kitchen sinking the idea of inflation.
You know what else TIP stands for?
What's that?
Totally illiquid pieces of shit.
Fair. It's fair. That is the last article that I like to trade. TIPS is another security that is literally just a speedometer on my dashboard and something that I don't touch at all. So that's for sure. But it's interesting, JD. Let's go back to I want to talk about stocks again for 1 second. On the year to date, right? If you look at, I have my year-to-date leaderboard that I always like to glance at. And what's amazing right now is that the VIX is up 40% at the top of my leaderboard, right? And to me, that's just a function of the curve steepening, right? Like you said, the curve's been steepening. We peaked out at 10 bips in positive territory. I think it was just yesterday. We're going to do a little back and fill, but the curve steepening feels like it is happening. And that's what's got the VIX perked up into the high teens here, right? Then you've got Bitcoin still up 38% on the year, not performing too badly. I always think maybe the Bitcoin is front running the potential Fed policy mistake, and we're going to see inflation pick back up, and that's why Bitcoin is so inflated. But then we've got semis up 34%. Silver and gold miners are up around 28-30% on the year. Home builders are up 27%. Utilities up 25% on the year, which is
Wow.
wild,
Wow.
right? Something you
Yeah.
usually don't see in a bull market, right? It's usually utilities
You
getting
know, that's part of
cane.
the that's all part of the AI trade, and it is
How
because
so? How so?
because AI is going to generate all this power consumption, which is going to mean more business for utilities. The same thing actually happened in the dot-com bubble in like 98, 99. Like utilities had like a monster run, and it turned out to be a bullshit trade. Like it totally collapsed, but it's the same thing 25 years later.
Yeah, yeah. And you got to keep in the fundamental story where the utilities pay generally a very good dividend because of the
And
smoothness
rates have come down. Rates have come down.
smoothness of
So
their earnings.
yeah.
Rates have come down big, so everybody rushes into utilities. It's
Yeah.
like clipping a coupon in the money markets, if you will. And so just right behind that, we've got a couple of cyclical sectors like ITB home construction up 23%, financials now up 20%. They weren't even in the leaderboard picture for the whole entire half of the year. And we've got the S&P tied with the Nasdaq up 18%. Now, I highlight that because you can see the nature of the change in interest rate policy stance caused a huge rotation in the stock market where the sort of tech sector backed off, cyclicals rallied, and the S&P caught up with the tech market. But what's interesting, if you look at what's negative on the year, and this plays into our commodity trade, what's negative on the year right now? Oil services off 10%, uranium miners off 8%, social media off 5%, XOP, oil and gas, and XME, industrial miners, off 4%. This plays into our commodity trade because if we're at a point where sort of everything is going to turn like a sell the fact on the Fed tomorrow, money is going to flow out of the stuff that's in the lead, so out of semis, maybe out of gold miners or something like that, but it's going to flow into energy, and it's going to flow into uranium miners, and it's going to flow into industrial miners. So that's the trade that I'm looking for coming out of the Fed, and if that doesn't happen, I'll be disappointed. Do you have any thoughts on that?
Yeah, I totally agree. I mean, look, since our last podcast, commodities have ripped,
They have.
absolutely ripped. I mean, we called the low in commodities. Now, the thing to remember is this is like day 5 of a multi-year trade, right? Like this is not like buy it for a scalp, get out of it, whatever. Like this is the beginning of a trend. You want to be building a position over time.
This is why you're listening to us, in my opinion. And this is why you should be reading us because we go into detail on everything that we talk about here in each of our respective notes. And I want to say this is why you listen to us because JD was way ahead of the commodity puke to the low, calling for it to be a low. And if you can't find the value in that as a trader, you should be watching the Flintstones. Okay. No, because you were ahead of it telling people get down in the 4-point stance, get the catcher's mitt out and catch this thing when it dumps. It dumped. It remained under pressure while we spoke about it again. We told everybody, hold on. Once again, if that's not valuable information, the Love Boat is on at 9:30. You guys can catch that, right? But my point is, like, I want people to focus in on this stuff because the Macro Dirt podcast is not just macro dirt. There's a lot of value in there. And so I think
Yeah.
that that's That's
Well,
important. So
subscribe to the newsletters, for crying out loud.
that's the no-brainer, right? That's the value trade right there. And we're coming up with something that's going to allow people to exploit a value in both of our subscriptions, which is a product to be named later. And we're going to
Yep.
get to that. I want to talk about something that Goldman Sachs said this morning that was pretty cool, right? The headlines out there are saying, like, Goldman Sachs said that gold might pull back on a 25 basis point rate cut. And that was kind of the message that got floated. And I was like, oh, but Goldman's looking for a gold pullback. And I got the note that they wrote. And the reality is that on a 25 basis point cut, they do see tactical downside. They reiterate their long trading recommendation on gold with a $2,700 price target early in 2025. Why? Structural central bank demand, gradual boost from continued rate cuts, and the hedging benefits against geopolitical, financial, and recessionary risks. So Goldman's still gung-ho gold at the highs here. What are
Well,
your thoughts on that?
we talked about gold last week, and you were bullish, and I wasn't bearish, but I said, look, I needed to break out at 25.30. That was resistance.
Mm-hmm.
It broke out, and it ran like an antelope,
Yeah.
right?
Yeah.
So it ran for 2 days. It's been consolidating for 2 days. My thesis is the Fed's going to cut 50 tomorrow. It's going to rip again. By an intraday, it's going to do the up, down, up, just like stocks. But it's going to rip again. Like 2,700 in 2025 is too conservative, I think.
Yeah, I
Like
agree.
I think 3,000 by March or April is totally doable.
I couldn't agree more. I read an analyst named Nikki Shields at MKS Pomp, and
Oh,
she
I know Nikki spoke at my conference.
yes, Nikki's a
Yeah.
mutual friend of ours. That's right. She's super talented salesperson in the metal space. And so we went over something several months ago, and we spoke about markets, and I wrote about it in the Navigator. But she put up all of these bullish points, same points: great hedge, potential rate hikes, the whole central bank buying thing, and then she put like a 25.50 target on it. And that the tendency for everybody is to not give gold any credit on the upside, right? Everybody gives gold okay, this is the slow moving trade and the walker that really isn't going to make a lot of people a lot of money. It's just a thing to hold on to. And the reality is if you're into something a little slower moving than like the C4 toxicity of Nvidia, gold has been a beautiful bull market, and Braden can throw that chart up there right now. I love bull markets that climb the stairs, JD, right? They've trade up to old highs, they've consolidate, boom, bust out, right, with a new candle to a new high, right? And then they consolidate at those old highs, boom, bust out. And that's all gold keeps doing. So until that trend breaks, man, where
and nobody is talking about it.
Still,
nobody is talking about it. Sentiment is so flat, like it's flat to bearish. Like actually, I mean, I think people are even bearish.
I couldn't even agree more. With price upside price targets of 2,700, like $150 above the market, like I don't think there are a lot of sellers around. So to me, that's like one buyer comes in and it's 2,700, right? We have Saudi Arabia try to.
It's 6%. That's all it is.
That's it. So Saudi Arabia, what if they try to grab another 160 tons, on the down low from somebody, right? Like that's 2,700. We're there. So, I'm with you. I still think that there's going to be a moment when gold trades like Bitcoin in 2020, and it's going to be totally, totally hairy, and there'll be a parabola on the upside, and there will be an Icarus print.
Dude, just like 1980.
Yeah, absolutely. Why not, right? There can be an Icarus print on the upside, and gold can remain in its bull market, and I think that that's kind of what we'll be in for. We'll have a big parabola away from the moving averages up to 3K, and then a pullback. So we'll see if that happens or not. Another thing I just want to touch on, base metals, right? Since we got everybody to hold tight in the commodity space, we made another good observation that base metals on this deflationary kitchen sink pullback all just backed into trend support, moving averages, consolidated, false breakdowns, and then we saw copper bounce. We saw zinc with a multi-sigma move the other day. It looks to me like we just did the pullback, JD. Do you think base metals can crawl out of here too?
It's actually the only base metal that I watch is really copper. I don't watch tin. I don't watch aluminum. I don't watch lead. I should. I should have that stuff on my screen, but the copper chart I mean, it's basing, and I don't think it's done basing yet. I have a tough time getting long here. But I would say it breaks higher in the next 3 months, something like that.
Totally
So
fair. Yep, slow moving bull market I can live with. The other commodity we have to touch on because I've got a great chart that Braden will throw up right now, the WTI crude oil chart. I think it gets lost on people that this is the level that has been rejected no less than 4 times in the last 2 years. So it's basically like we saw it twice in 2023, we saw it earlier in 2024, and now we're seeing it again. Oil into the 60s, you better take a Polaroid because it doesn't last very long. What do we got this morning? 71 and
71.
dime bid,
Yeah.
right? Is it going to be another spike? Like, does the timing line up enough to make you salivate that oil is going to put in a $7 or $8 rally after the Fed? Almost no matter.
Also, one thing people haven't been talking about is oil's in backwardation. Like
Yeah,
backwardation is usually bullish,
exactly. The calendar spreads are totally constructive. They've been volatile, and here's the story, JD. A lot of the front month spreads coming out of the last several rollovers where there were people caught long commodities coming into the rollovers, the spreads got crushed. So the front end was getting crushed in the front to backs, and everybody got out of the way of that. Right. So nobody wants to be long the front end of crude oil anymore because they've been getting crushed in the rollover. And still we've seen spreads stay in backwardation. So that is definitely a sign of strength. And I'm going to say that backwardation, if Jeff Curry is right, or if some of the other smart analysts are right, and the idea of a supply glut is overblown, we will see backwardated WTI. We will see funds pile in on the long side to earn that carry, because when that trade works, it's a fucking beautiful thing.
Yeah.
Right.
Yeah.
So we'll see if that does transpire. So that's really interesting to me within the commodity space. The one other market topic I just want to touch on, because it's a little bit of a hobby horse and a great chart, is Nvidia. Right. And Nvidia has been very much wagging the markets to me, and I still see it like that. Like, as this Nvidia saga goes, so goes the S&P. And it's the same kind of thing. If Braden would throw the chart up, where it's consolidating, we've got lower highs, we've got potentially a fourth lower high, but we're starting to build that descending trend line in Nvidia now, where if we pop above it, you do not want to be short, because this thing is going to rifle back to 140, maybe for no reason at all. And fundamentally, it sounds like there is a potential setup for there to be a backup of AI chips
Did
coming
you
at us.
did you see
Talk
Lynn
to me.
Alden's tweet about Nvidia?
No, tell me about it.
She said that right now Nvidia has a lower PE than Costco.
Yes. And I'm long Costco, which is a little scary. Because I'm a guy that's like, PE, do me a favor. Show me a trader that's made money trading price to earnings ratio, and I'll show you a unicorn, because I don't think that they exist, right? That's like an old Wall Street thing to me, JD, right? Like when I was learning about the business and reading the Wall Street Journal, it was pay attention to the price to earnings ratio of these sectors because they never change. And the reality is they change constantly, right? It's just a function of price movement. And in the era of electronic trading, take your PE ratio, put it next to your tie clip. You know what I mean? Like, it's not in the sort of, speedometer list of things that we're paying attention to. So I think for a pre-Fed day, where this podcast will be thoroughly discussed before the Fed announcement tomorrow, we can go into a couple of off-market topics, right, JD? I'd rather not go the P. Diddy got arrested thing. Maybe we can talk about the Trump second assassination potential attempt. That's a little bit hairy. That's 2 in 1 election cycle to me. Not really happy with it. What are your thoughts?
Man, it, Lester Holt is a piece of shit. That's all I want to say. Did you see his broadcast, like the evening of the Trump assassination attempt?
Yep.
He's like, yep, somebody tried to assassinate Trump, and it's Trump's fault because of his rhetoric in Springfield and Haitians and eating cats and dogs. It's all his fault. Like, let me get this straight. It's our fault for making you want to kill me. Like,
Yeah.
that's
Yeah.
the logic.
Yeah. it's frightening. They went to victim blaming so fast, like
That happened. It happened in a nanosecond.
in a nanosecond. Yeah, they
Yeah.
went. There was no grace. There was no try to shoot at the poor bastard again. Nothing like that. It was wheel out Hillary to say the object in this case is Donald Trump, his demagoguery, his danger to our. It's like, I mean, I can't even believe that anybody even watches that kind of content, pays attention to her
Dude,
anymore.
I don't know if you remember this, but one of our very first podcasts, when the first assassination attempt happened, I even said we could get another assassination attempt. Remember me saying that on the podcast? I'm like, this is very possible.
100%. It's what is clear, I think, to me, as sad as it is that the quote rhetoric of quote Donald Trump is a threat to democracy, that actually works on some hopeless idiots, useful idiots out there. You know what I mean? Like they actually take that into account and say, yeah, this guy's got to be removed, and then you've got the president saying things like he should have a target on his back and things like that. And next thing you know, there's a guy planted in a tree for 12 hours outside of his golf course that nobody knows he's necessarily playing at that day. Right. So there's spooky shit all over
Yeah.
both assassination attempts. And it's just unbelievable to live on this razor's edge going into an election. Right. This morning's Axios newsletter was all about, just so you know, it's going to take days to figure out the winner of this election. So it's a pure psyop to socialize the idea that we're not going to find out the winner of the election on election day, which, if you're my age, that's the way it's always been. Ever since day one, it was by dinner time on election day, we knew who the president
Yep.
was. So, they're changing it. They're building in room and reason for chicanery. And man, it's going to be hairy. Right. You brought up something very cool in your, you just did I guess, a sort of fun paragraph on the Leman anniversary, right? That was just the other day. What's the actual date, JD? September what?
September 15th.
15th. The anniversary of Leman going under, and you were an employee at the time, which had to be completely freaking hairy. But we both, both of us got our starts at big investment banks, running big books on big decks. So unpack the Leman experience for us a little bit, and then I'll unpack the GS experience.
I'll tell you a story from
Yeah.
Leman. Okay. Equity derivatives trader. He's not the head of equity derivatives, but he's like a pretty big trader, right? He trades semis. Okay. Something goes wrong, he gets all pissed off, and he takes his phone and throws it on his desk, and it bounces up, hits his screen, and smashes his screen. Right. So now he's just like, damn it, like my fucking screen's broken. Like, what am I gonna do? Dude, in 30 seconds, these two IT guys come running over with a new screen. They have these drills. They're like, zzz, like they were like a pit crew. They
Yeah.
like took out his monitor, put in a new monitor. He was good to go in like 3 minutes.
Yeah.
Like it was incredible. Dude, if you worked at JP Morgan, or JP Morgan is a good example, a big bureaucratic bank, it would take 2 months to get that fixed. You have to fill out all this paperwork. You get a talking to from your boss. Don't express outrage on the floor like that. It would be this big problem. Leman, that behavior was encouraged. Like you want people fired up. Like you want people to be working hard, and it was one of the most incredible things I had ever seen.
Yeah. And for a red-blooded trader, young red-blooded trader witnessing that, like you begin salivating out of just respect, right? You're like, what did I just fucking witness? And so I may as well tell a similar story. That's a Goldman story where we once got picked off in the gold markets, and picked off meaning like a fast money account is calling to buy gold from you and six other banks on the street at the same exact time. But from the time that they lift your offer and the salesperson on the phone says, "Oh, you sold gold at a half," it's $4 higher, not 50 cents higher, not a quarter higher, not something I can get out of this and it's okay. It is higher to a level that you have to report the loss to your manager.
Yep.
Right. And so that happened once on the desk. Guy Adami was quoting gold of CNBC fame. He promptly disintegrated a phone into the desk, plastic everywhere, right? Because somebody took 100 grand out of Guy Adami's pocket and he was not happy about that, right? So I'm wondering, I've got like a helmet on, my head down. I'm just trying to cover things and make sure all our details are covered. And we explained to our manager, who will remain nameless at this point, at the time, what happened, right? And I'm like, I have no idea what's going to happen next year. I don't know if they're going to yell at Guy for breaking the phone. I don't know what's going to happen. I don't know if I'm going to get kicked off the desk just for being here. I have no idea. Our manager picks up the phone, goes into the client that picked us off, and says, yeah, can I speak with XYZ? Yeah. Yeah. Buying gold like that from us, never going to happen again. Did you hear what I just said? Never going to effing happen again. It's a good trade. It's fine. We're big boys. We can hear with it. That happens again, you and I got a big problem. Do you understand what I just said? Click. And I was like, wow, that was big ball stuff right there. Right into the client. Trade's good. We're going to eat it. No problem. You do that again, the line is cut out, bro. Go somewhere else for your fucking liquidity. Right. And that was like the bank standing up for itself. Right. And that was, you do not mess with the GS badge out here. Right. And you do not take advantage of our liquidity. So that was kind of a culture tone setter. You know, and so there's always a great story about a broken phone at some of the old banks like that.
Dude, I broke a lot of phones.
Yeah, I mean,
I broke a phone. I got a standing ovation on the floor for breaking a phone.
That's badass, man. It really is. But it's the center of attention, and it's really fun stuff. I'll never forget the day that I went to work at Goldman Sachs, because the culture was changing there super quickly. The day that I started there was the day that they stopped paying for every employee's lunch, right? And you used to have a $20 a day stipend to buy lunch. And I'm not talking about 2024. I'm talking about the mid 90s, when $20 would buy you 5 lunches.
Yep.
So everybody would order their lunch for the day and then order a 12-pack of Coke, a bag of chips, this and that. And everybody had basically a little small bodega under their desk, you know, with chips and snacks and cans and cases of Coke. And so I got there, they stopped buying everybody lunch. Everybody was paying for lunch on their own. But then shortly after, they went casual Friday. And when you were showing up at work 5 days a week in a suit and an Hermès tie and a white button-down shirt, you were pretty thrilled to throw on khakis and a polo on Friday.
Yep.
And that was good for the culture, I think. What were things that like at Leman when you were there? They were already into casual days, yeah?
No, actually, Dick Fuld was a suit guy. So in the late 90s, they went business casual to sort of compete with the other banks for talent, right?
Mm-hmm.
And then after the dot-com bust and after 9/11, it was after 9/11, Dick Fuld said, F you, we're going back to suits. So when we started working in the new building, which was like February of 2002, all suits. And we were in suits the whole time I was there. So,
wow, that's amazing. Meanwhile, I was at Goldman from 93 to 2000, and we had just gone to casual Fridays only, when I guess shortly before I left. And that was a big culture change for that place, man. That's for sure. And I can't even imagine what it's like now. I guess they're all casual all the time. And
yeah, pretty much. Yeah.
Yeah. Very different time on Wall Street. But I'm glad that I got to see that point, because I used to be pretty motivated when my boss used to walk in all buttoned up with his tie and sit down on the desk with 3 black truck coffees, and proceed to make more money in the markets than anybody else. And it was because he was in the suit. He had his game face on hours before anybody else did, and he had enough caffeine to propel himself to Mars.
Do you remember what you told me like 12 years ago, 10 years ago, about wearing a contrast shirt, a 2-tone shirt?
Yep.
Like a blue shirt with a white collar, white cuff. Yep.
If
you are wearing a contrast shirt and you do not have a 7-figure bank account, you are a tool extraordinaire.
Period. Right? You only can look good in the 2-tone shirt if you've got your car waiting for you outside and the driver is here on your floor waiting to walk you down there. Right? That's like the only way, because I used to see junior guys try to get away with the white collars and the white. you're like, dude, with a guy that doesn't know what the fuck he's talking about, that is the worst look on earth, you know? So it just used to stand out to me. There was like, there was some smooth partners like Howard Katz at Chaminade. Jesus Christ, I'm using my schools at Goldman Sachs. And he would literally walk around doing very little all day, but looking like he was worth so much money. It was unbelievable. And always had the white collar on with the blue shirt.
I actually have Bull and Bear cufflinks. I do.
That's cool. I do too.
Yeah.
I do too. Well, we've still got the wrestling Bull and Bear right here on the desk. I mean, the Bull Bear theme never goes away, especially when you work downtown and you kind of know the size and scope of the Wall Street Bull. Really cool. All right, JD, what else? I think we've covered everything here. We've gone around the markets. We're ahead of the Fed first rate cut in, God, as long as I can remember tomorrow. I think we laid out a good path for everybody. We got everybody to stay long and strong commodities. We're both kind of thinking the S&P is going to pop through this double top on no matter what happens, because there's no such thing as a triple top. And it'll be interesting next week to see where we are. But I think we did a great job of wrapping the whole thing up today.
Don't forget the book.
Don't forget the book. It's coming out. Make sure
Night
you
Moves.
pre-order. Read your short stories. Treat yourself on a Sunday morning with a nice cup of coffee.
Yep.
Hasta la vagina, everybody.
Hasta la vagina.
Peace.